Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. As we are leading into Tuesday, market is up a little bit this morning after yesterday's pullback that we got. Turned out that it was a pretty decent down day as we saw some movement in the major equities markets and as well as a little bit in the commodities markets. But I don't feel like it was too much of an overreaction. Before we get into that, if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. And remember, if you are interested in learning more about what we do at TradersArmy.com, you have only 3 days left to get your first month for $20.20 as we are kicking off 2020 the right way. Come out, see what you like about Traders Army, $20.20 to kick off 2020 for your first month. So give it a go. All right, let's go ahead and dive in. So the ES, as I'm looking this morning at its level, we're up about 10 points. We were up a heck of a lot more than 10 points in the session as the market rallied hard up into the supply level that we identified yesterday. So yesterday we were looking on a 15-minute chart at this supply level here, which started around the European Open for a potential reversal. The market came into that zone, and then this is an example of how kind of the right way to use the 6 candle rule. We came into the level, and then 1, 2, 3, 4, 5. After the 6th candle, the market really had gone nowhere. So at that point, you're supposed to take your stop, move it to break even. Now, I don't anticipate most traders were awake, but if you happen to be, not in the U.S., then this was a phenomenal opportunity to take your stop and move it. And if you were in bed and you didn't move your stop, it was a very small level. You've now certainly moved it because you've gotten about a 3-to-1 move out of that zone. So that trade worked out very effectively off that little move away on a 15-minute chart. So what does that mean for today? Well, taking a look at just a potential breakdown, I think we have a potential breakdown below this area here, as that's levels we've hit a couple of times. And then this demand here seems to be not a phenomenal demand level. Bad time of day that it was formed to retest off this area in here. So I think we could still break down and get another leg down and move from there. We're looking at the NASDAQ. So yesterday in the NQ, we did actually have, right after our daily market commentary, we hit our 15-minute level. Got a right here, got a nice little move away from that zone, retested it a second time and got a little move away. The third time didn't really move away all that much, so then no surprise that it broke the next time through. Now, that came to the same level as the S&P, and we got a reversal. So that NASDAQ trade was a nice little setup. I will say the NASDAQ this morning up about 0.5%. The S&P's up less than 0.5%. So the NASDAQ a little bit stronger this morning. So if you're looking for a short, the NASDAQ is not the one to do. The S&P would probably make a bit more sense at this juncture. When I'm looking at longs, I still have, if I go down on a 4-hour chart, we don't have any longs until a bit lower, so I think that, could be a good setup. So looking at this in the NQ, this is kind of the setup and the structure that I like as far as this shape. You hear me talk a lot about this as far as a shape. This when you have a move down followed by a move back up. Now, I typically would like it to go a bit higher on the retracement, but that usually sets up for another leg down. And I wouldn't be surprised to see a leg down look something like this. Don't know that that's what's for certain going to happen, but that's a very common price pattern movement, and that's a 4-hour chart. Well, looking at that on a daily chart, if we were to get that kind of a movement, we would see that it's not going to be an overly aggressive move. And a pullback into there would really, that wouldn't be an overly aggressive pullback and would actually put us back onto a daily area of demand. And even if I go a little bit bigger and look at it on a weekly, that a pullback into that range would keep us, in still a kind of a weekly upward trend. So just keep that in mind. If we do get a slightly deeper pullback, it's not the end of the world. Matter of fact, it's probably a fairly healthy pullback to give us an opportunity to get long again. So I'm going to, certainly if you're trading on a smaller time frame, then you're going to have a lot of opportunities inside of there, but I want you at least to consider that. Looking at crude oil, so here looking at crude, we took a look at this level yesterday as a potential breakdown area. Put an alert there in case we do get a bit of a breakdown, as it's just really been chopping sideways in the overnight session. So that one I'll just kind of leave in place. No real changes from yesterday. And then gold, we were looking yesterday in gold as it was kind of pinching along sideways. We were thinking about a potential triangle pattern as it got 1, 2, 3, 4 touches. We never really did get the fifth touch before then breaking out of that triangle pattern. So this one didn't turn into a triangle because you got to get 5 to 7 touches for a true triangle pattern. So now we're just kind of waiting on price to make its next move. Lower highs are telling us that there's a bit of selling pressure coming in, but there is some supply up above us as well as a little bit of demand down below. When I move over to our bonds and currency markets, in the ZN, we've rallied back up into our little level of supply. Now, the downside of this supply level, we've hit the confirmation entry, so we do have potential for an entry out of this level, but our opposing fair price value area is right here. So that level's really suspect at this point because of the basing in front of the level. I would need a better pullback for me to be much interested in it. Matter of fact, it's set up for a decent little breakout. So I don't know that I love this on a pullback. I like it better on a pullback. I don't know that I love the short any longer based on the basing in front of the level. So if you're not in it, I wouldn't be jumping in it at this point. The Aussie is continuing its move down and extending that move down. We had a little bit of a triangle breakout, which set up for a reversal if price returns into this area. Now, as I can see that we have, we've broken kind of the next leg down. Looking at this on a 4-hour, you don't really have any demand for a little bit, but we're coming into that level. On the hourly chart, if I throw my momentum on there, and I always take a look at momentum, we will see that we are gaining a bit of momentum in through here as we're rising in momentum, but still lowering in price, which oftentimes starts kind of the formation of a little bit of a base. And so let's see if that happens. I don't have any quality supply levels above me to lean on at the moment for a short. This is probably the best one, but it's not a phenomenal level, and so I'm going to hold off really on identifying a supply level in here for a reversal, partially because of that momentum shift that we're seeing. Now, if we come back up to here, then you're going to have a better opportunity. The euro, so we were looking at the euro yesterday. We didn't have any strong breakout opportunities in the euro. Identified this level yesterday while we were trading, but it didn't give us that true breakdown. We could still see a breakdown at some point below here with this sideways price action, but it's not a phenomenal one, especially since I don't have a lot of room to roam having this level below me. Now, this 4-hour level is actually a pretty good little level, so I think that there is still a little bit of profit to be had if you want to take the breakdown below that area. Canadian dollar, we got a breakout level identified above this 75.893 area in the Canadian dollar, but we didn't get any full breakout above it to make it worthwhile. So we're still holding off on this one, as this one still has a potential for later today, because our momentum is kind of shifting on the Canadian dollar as well. So in our currencies, not a whole lot to look at when it comes to the currency markets. As far as overall opportunities, not a whole lot is jumping out as tradable opportunities. In any of them, we're looking at here at a potential reversal right in there with a target up here at the green, and did not come back into this area as of yet. So that one's still very valid, although not gotten to it as of yet. I would need price to drop a bit further into that zone. And then the Japanese yen, we're staying away from our levels. So currencies are a snooze fest today, and most of our activity is happening in our equity markets as well as our commodities. But if you have any questions, please, as always, send us an email, support@tradersarmy.com. We have our daily market commentary will be out again tomorrow. If you have any questions between now and then, let us know. I will talk to you soon.